So I want to give you this quick update on interest rates, home values. The home values, I'm going to show you what's happened all the way through the third quarter of 2024 and what my thoughts are on interest rates and home values throughout the rest of this year. Right now, interest rates have been averaging around 6.95%. You can see here since September of 2024, interest rates have been increasing since September of last year. And you can see that graph right here. This is Freddie Mac, and they post the average interest rate every single week. So they post new rates every single week. You could go here and check it out if you're following. Every Thursday, they update the average interest rate for that previous week. You can also look at my website. If you go to bondmortgage.com, you can check out my live interest rates. I do post interest rates on my website. I'm one of the only mortgage companies here in Redding that will post my interest rates for you for full transparency. So if you have questions, you want to price out a loan, price out a scenario, feel free to visit my website anytime. So where do I think interest rates will go this year? It's going to depend on inflation. You see the 30-year fixed mortgage, it can change up or down based on inflation, and interest rates change every single day. Now the feds, they don't change the 30-year fixed mortgage when they come out and raise interest rates or lower interest rates. They are changing the shorter term interest rate, which affects your credit cards, it affects your equity line of credit, it affects car loans, but it can sometimes have an adverse or opposite effect for the 30-year fixed mortgage. What I mean by that is in September of last year is when they started lowering that federal funds rate. And since then, they've lowered the federal funds rate by 100 basis points. We were at like 5.5 to 5.25. Well, now we're at like 4.25 to 4.5. And the 30-year fix, since then, they were at low sixes in September of 2024. Now we're ranging almost 7%. So you can see that they've raised about 1% since September when they started lowering the federal funds rate. You might be scratching your head and wondering, why is that, Pete? Why did the Fed start lowering interest rates and then the 30-year fixed mortgage increase? The short answer is when they lower the federal funds rate, that is creating more money into the economy. They're putting more money into the economy and therefore is inflationary, and the 30-year fixed mortgage is enemies with inflation. And so if investors, the ones that buy our mortgage debt, if they think that inflation is going to increase, they're not going to buy as much, or they're going to want the yield, the interest rate to be higher in order to come in and buy more mortgage debt. And so that's why the mortgage rates have increased since September. If we can keep inflation low, and if we can see inflation coming down, and if the unemployment rate starts screeching up, if the economy slows down, then we will see interest rates get better. And I do believe we will see that. I don't want the economy to slow down. If the economy does slow down, this is where you're going to see interest rates improve. Recently, there's been many talks about tariffs and Donald Trump putting tariffs on Canada, Mexico, China, and other countries. There's been many talks about tariffs affecting interest rates. So far, we haven't seen much of a change. The 10-year treasury has actually gotten better, so interest rates have actually improved over the last 3 or 4 days with all of the tariff talks. And I think a big reason for that is the tariffs could potentially, in the short term, slow down our economy because prices are getting more expensive. It's not necessarily inflation because the tariffs are putting the cost there. Obviously, the prices would go up, but that would kind of hurt our economy as far as gas prices, goods and services that we buy at home. So as of recent, interest rates have been getting a little bit better with the tariff talks. As far as home values in our area in Redding and Shasta County, these numbers are through the third quarter of 2024. So let's take a look. FHFA, they track home ownership. They've been tracking it since the 1970s. They track the entire United States and all cities and counties. And for our area in Redding, for the third quarter of 2024, we had a 1.22% market appreciation, which is actually pretty good. That's typically one of the busiest quarters that we have, and that's because they would have went into contract in June and July, and they would have closed in September, October. Remember, the third quarter is July, August, September, and these months are typically the most busy months that we have, and this is when most people are moving. We had a really good third quarter, 1.22%. If we go back the year before that, you can see we had about 1.7% appreciation the year prior. When we get the fourth quarter numbers for the entire 2024, I think we'll see a market appreciation of anywhere from from 2.5% to 3% for our area for market appreciation. What that means is if you bought a home for $300,000 a year prior, 3% market appreciation, you'd have about an extra $9,000 of equity for that home if you had bought a year earlier. This market isn't really skyrocketing and it's not really plummeting either. It's slowed way down from 2021 and 2022. The market has been pretty consistent, pretty steady. 2 to 3% market appreciation is actually pretty healthy. If we go back all the way to 1970, the average appreciation for our area is about 5%. So 2 to 3% appreciation is pretty good. What do I think Homebuyers will do this year for 2025? I think our demand in Shasta County is very strong. We still see a lot of people moving up from the Bay Area, and with the fires down in Southern California, I do think that we'll get some of those people that move up here and retire and buy some real estate up here in our area, Northern California. So I do think that our demand is going to stay strong, and I don't see our inventory shooting up. Right now in Redding, our inventory is about 209 homes on the market. Now, this is about the average that we've seen over the last 12 months in Redding, which is pretty low. Right now, depending on the home, it's taken about 2 to 3 months to sell a property from when it goes on the market to when it sells. I do think our demand is going to stay consistent. And so if you're thinking about buying a home, I think it's going to be a great time. Now, we're going into the springtime, and during this time, typically the inventory will rise over the next 2 to 3 months. And so this could be a great time for you to pick up a home and get a great value, maybe get some credits or negotiate a great price. With my monthly updates, I always like to feature a home that I would say, hey, this is a great buy. And the one that I'm picking this month is for a first-time home buyer. This home is located, just came on the market, located at 3525 Paul Drive. This is a 3-bedroom, 2-bath home, about 1,100 square feet. And look at the pictures. It's a great little home for a starter family. Super clean inside. I haven't seen the inside, but I think this is a great deal for a first-time home buyer. If you are a first-time home buyer, this is how I would maybe finance this home. If you wanted to do 100% financing, I would offer $265,000, $15,000 over asking price, and ask for a $15,000 credit to cover your closing costs. Your payment with tax and insurance and everything would be about $2,136, and you wouldn't have any money out of pocket. Of course, you could put a down payment down. If you wanted to put a small down payment, I would offer $260 instead of $265. Closing costs are going to be cheaper if you're not having to do the down payment assistance. The payment with tax and insurance and everything would be about $2,000, and you come out of pocket about $8,500. Of course, you could put more down. Again, purchase for $260, ask for a $10,000 credit. Your payment would be about $1,904, and you would come out of pocket about $25,000. For this house at $250,000, I think it's a great bargain. This home's going to appreciate over time. You'll be able to lock in that mortgage payment right at about that $2,000 mark. And remember, that $2,000, it's never going up. You just locked in your housing payment for the rest of your life. Of course, your income, though, it's going to get better and better and better, more than likely. And so that payment's going to get easier and easier and easier. Of course, if you rent, that rent's going to continue to go up. Buying a house is not easy right now. It hasn't been easy for most of my lifetime. If you have questions about this, let me know. I'm happy to help. We've also been doing lots of equity lines of credit. If you own your home, an equity line of credit allows you to access your equity without paying off your first mortgage. You can use this equity line of credit to pay off credit cards, to do home improvements, to do many things. Maybe you want to buy another investment property. We do these equity lines. Reach out. Thank you so much for watching, and we will talk to you in the next update.